Hi all. Now, as mentioned in my earlier video, the last video regarding the crowd-funded commercial real estate investing, today we'll be discussing the difference between real estate investment trust, which is REIT, which is again investing in commercial real estate spaces, in comparison to the crowd-funded commercial real estate investing. So quickly we'll be going through more than 15-20 differences between each of them, which I could identify after my detailed research. So REITs, as you know, it is publicly traded just like stocks. So you can buy units of REITs. Say Embassy REIT is currently at all-time low, 52-week low, available at some 308 rupees. So you can consider investing in them. So either you can buy a unit of that and multiples of that. So you don't have any liquidity problem. Like a small investor can also invest into that. So from that, you will get dividend yields at 90% rate. Whatever the profits they are getting, whatever rental yields that they are getting, 90% of that is paid out, and you will get a capital appreciation also. Normally in REITs these days in India, it is seen that the appreciation is very low or almost flat, but still there is a chance of appreciation in the stock. But in case of crowd-funded commercial real estate investing, you will have to invest at least 25 lakhs, and that will be a complete single property, and you will be shareholders in the SPV, the special purpose vehicle, as mentioned in my last video. And in that private limited company formed by the SPV, you will be holding, or you will be the shareholder in that private limited company, and you will get rental yields through them. So it is not like a stock or units of stock. You will have to invest a larger chunk of cash there to get invested in such a property. So as I told in REITs, the second point is that the minimum investment can be as low as just 300 rupees. But in case of commercial real estate crowd-funded platform, you will have to at least invest 25 lakhs, or in some cases, if you negotiate, you will get a smaller pie of 20 lakhs. In the case of REIT, the yield will be based on the entry price. Say if you are entering at 300 rupees, then the yield will be, say, if you are getting some higher amount, the yield will be higher. And if you are entering the, or if you would have entered, say in Embassy REIT some 6 months back at 400 rupees, then your rental yield will be lesser, because the company is giving a constant rental yield, and if the entry amount is higher, then the yield also will go low. But in case of a crowd-funded platform, the rental yield is constant, whatever 7 to 9% as they are committing. REITs, again, as it is listed in stock market in the Demat account, the volatility is very high. So based on the market movement, you can get a movement in the REIT price as well, though it is not that directly proportional to the stock market volatility, but still you will get a up and down volatility day to day in the REITs price as well. So this fluctuation may not be in line with the actual scenario, but in case of crowd-funded CRE investment, the fluctuations are very low. It will be purely based on how the real estate market moves, and real estate doesn't normally exhibit a higher volatility. It is almost stable until and unless you will have a big crash coming in, or recession or something coming in. Otherwise, the prices are very stable, and the fluctuations in the market or the price will be in line with the actual ground reality. The dividend payout normally in REITs in India is on quarterly basis on all the three listed Embassy REIT, Brookfield, and Mindspace REITs. The dividends are paid out on quarterly basis. So 4 times you get dividends in a year. And in case of CRE crowdfunded platform, you will get monthly rental yield. Every month you will get the rent, your bank account, before the 15th. As we mentioned in the last video, REITs are investing in highly diversified portfolio. They will have lots of investments in various real estate properties, commercial real estate properties, and spaces. But in case of crowd-funded real estate platform, the investment is only in a single property for the 25 lakhs. So diversification is not there, concentration risk is there. So that is one risk thing you can consider for the CRE platform. In REITs, as I mentioned earlier, the investments up to 10% can be done in under construction properties. So under construction properties never give a rental yield immediately. We'll have to wait for 2 to 3 or even 5 years. That is why the REITs are having lesser rental yield compared to crowd-funded platform, wherein the crowd-funded platform don't invest in under construction properties. It will be completely invested in pre-leased, ready to move in, and ready rental yield property. I recall that Property Share, which is one of the crowd-funded platform online available, they had once invested in an under construction property, but that was a complete failure, and that is why Property Share is now having a least preference compared to investments in platforms like Strata. They will not repeat that thing, but currently nobody is investing in under construction properties as far as the crowd-funded CRE platforms are concerned. In REITs, the investments or the properties or the investment rationale is done by highly experienced investment professionals. But in case of crowd-funded platform, which is comparatively new, only 3 to maximum 10 years new, they are new to the thing, and comparatively lesser experienced people are working in this. The lack of experience may affect the investment returns up to some extent. In REITs, 90% of the profit from the rental yield and after other expenses is paid out as dividend. But in case of CRE platform, the 1% management fee is taken out and rest 99% is given out as the rental yield. In REITs, the investors will have limited control because it is internally managed. There are a lot of properties being managed. So disclosures of all the investments or what all things are done or what all decisions are done on the property, whether it is buying, selling, etc., is not being discussed with the investors. But in case of a CRE platform, as I told in the AGM meeting, regarding the selling, buying, etc., is discussed. So it is having more control in the CRE crowdfunded platform. REITs can have debt levels as high as 49%. So it is almost half of the assets. But in case of CRE, at the SPV level, there is no debt at all. It's all directly cash is given out and the property is been bought. In REITs, as I told, there is a lot of properties being managed, so there is slightly a lesser transparency, though many disclosures are given in the annual reports, but still there is lesser transparency compared to crowdfunded platforms. As I mentioned, in the crowdfunded platform, you will get all the details and documents in the investors dashboard, which is available in the app or the desktop version. So you are free to browse through that and understand everything and ask any doubts to the investment manager allocated to you if you have any doubts. In REITs, once you buy a property, you cannot sell it for the next 3 years. Unlike in crowdfunded platform, you can sell it at any time if the investors are willing. So if the 75% of the investors are willing to are willing to sell the property, they can easily sell it off without any hesitation. As I told, the appreciation of REITs is very low. The stock appreciation is flat and it's very sluggish. But in a crowd funded platform, the actual appreciation is based on the property and the area in which it is invested, and normally as the area progresses or develops, the property appreciation also goes up. Main thing is that in REITs, there is a regulatory authority, which is the SEBI, which is actually regulating the stock market as well. But in case of the CRE crowdfunded platforms, there is no such regulatory agency like SEBI. So maybe on a later date, government can bring in once the momentum in this sector increases. But currently, there is no such authority controlling the regulation. REITs invest in diversified assets, and CRE will have concentration risk and it will be investing in a single property, which is already mentioned above. In REITs, you will not get a dedicated investment manager. In case of CRE platform, you will get a dedicated investment manager. So for a area, say for Pune location, there will be one particular manager and he will be personally taking care of your needs. They will be calling you, they will be attending your doubts, they will be meeting you and discussing about the features of the app and what all things you get and clarify all your doubts. So it's more comfortable in CRE platform compared to REIT as far as the doubt clarification or support is concerned. In REITs, obviously you have a high liquidity, you can sell it off at any time, though compared to stocks, you cannot sell it off at a desired price in case of REITs, but still it is very easily you can sell off the unit these days. But in case of CRE investment, liquidity is an issue in the sense you cannot sell it off just like a stock, like with a click of button. So you will have to give some time, say 21 days to 2-3 months, for the investment manager to process the request for selling the property. And comparatively easily compared to the offline investments, this is easily sold off because it's only a part of the large investment. So 50 crore property, only 25 lakhs is the liquidity which you are looking at. So it can be easily shifted on to the one in the waiting list or who is looking for resale. So that will be managed by the platform and you will get the liquidity, though it is not as liquid as REITs. So again, the question, which is right for you? So as I mentioned in the earlier video, there is no right and wrong in this. Both the investments are having its own pros and cons. So if you cannot take any risk at all, then go for REITs. But if you can take a slightly higher risk and get a higher risk reward ratio, like higher returns compared to REITs, then definitely you should consider investing in crowd-funded platform. So these platforms are in a booming stage right now. Going forward, maybe the rates can also go high. Maybe 25 lakhs may become 30 lakhs or 35 lakhs, or maybe as the demand increases, they can increase the management fee, etc. So I suggest that currently it's better to do your analysis and invest in one of the properties so that you can participate in the long-term wealth creation. And also, as far as the diversification is concerned, already you are having mutual funds, stocks, bonds, and maybe gold also. So in addition to that, you can have, or you can consider investing in commercial real estate spaces through such platforms, which will really help you diversify your asset class and help beat the various uncertainties which is currently prevailing in the market. Hope this session was really useful for you. In case of any comments or doubts or queries, please feel free to message me in the comment section. If you like the session, do hit the like button, and if you're not subscribed to my channel, please do subscribe, and please share the content to your friends and relatives so that they can also understand this new investment theme and participate in the ultimate wealth creation. See you in the next video. Till then, happy investing.